And I think that South Florida has all of those ingredients in place. We have one of the best airports in the country. It's 15 minutes from downtown. We have advantageous tax situations, which are great, especially as people with money are going to be adopting hybrid work models. We have great quality of life, great weather. We have an international feel, which is something that people from the Northeast like. And I think that now South Florida has all those ingredients in place.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello, and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, it's time to get caught up on the economy.
Such a moving target, Eric. And, you know, we're real estate brokers. We're out in the market and we keep seeing the inventory shrinking, prices going up, and we all have our gut feelings about what's been going on. But this is a great opportunity to really reach back and see if there's any hard data to validate what our feelings are and to talk to someone who can really point us in the right direction on that.
Yeah, you know, Anna Bozovic, she's going to be she is our window to South Florida. She does a great job of collecting data in the South Florida market and let us know what's going on, what's what down there. So looking forward to talking to her. First, Stephen wanted to, before we get into our guest, wanted to read a review that we had. It says, new to your podcast, I'm looking to move to the Tampa Bay area from Alaska within a couple of years, and I plan to continue investing in real estate. Your show seems to be a great platform to learn about the Florida real estate market. You do a great job. Thank you, guys. CPF, he gave us a review, or she, from Apple Podcasts, and we really appreciate that. Guys, it's a challenge for us to program this show, to produce this show. Getting guests to come on that find it valuable for their time to come on and talk is a challenge. And you leaving reviews like the one we just read do tremendous benefit in trying to get the best content for you to learn about the Florida real estate market. So thank you so much for that. Hopefully I'm not totally butchering the name, CPF, for leaving that review. And if you've not done so, please go to the Apple Podcast store and leave us a review, or Facebook, or any place that can help people understand that we do have some listeners that care. Steven, anything else before we roll into our guest?
Let's roll in and do some analytics. Today we have with us Anna Bozovic. Anna is a returning guest. She is the founder of Analytics Miami. For the past 4 years, she has been publishing long-term trend analysis on the South Florida real estate market. She is also a speaker on macro-focused think tanks, speaking on a variety of topics, including history, monetary policy, and world economic trends. Anna is frequently quoted in national and international press. Her real estate reports are outcome agnostic and are published with the intent of bringing truth and clarity to the market. Anna studied math and physics at Columbia University, and her reports draw upon her abilities to see past the noise and to recognize patterns in data. She is governor of the Miami Association of Realtors and is a Florida Realtors State Director. Anna, welcome back to the Invest Florida Show.
Thank you. Great to be back. Thank you for having me.
Yeah, and we're so happy. We said when we had you on the first time that we were going to try to get you back every year to 18 months to do a recap on the South Florida market. I actually listened today to our last podcast to see, because we're doing a lot of prognostication. I wanted to see how much we missed. And I'm not going to steal your thunder, but we were pretty darn accurate, Anna.
We did a great job. I remember we did a great job of identifying what the driving forces were of the momentum, and that's an approach I always take. If you want to try to figure out where the world or the markets are going, you have to try to identify the driving forces and where the shifts are. And we did a really great job of that, sort of in the early days back then.
So why don't you give us a 30,000 foot of a summary of like what that was, because it really is what's happening now.
Yeah, so back then, I think we hypothesized that we were in the early days of a shift in the nation, that COVID was accelerating all sorts of trends, wealth gaps, changing new habits to work from home, all that stuff, and the world was shifting. And now looking at, we have a whole calendar year that's done, 2021, that's on the books. And when we see what's happened with the residential markets in South Florida, we really see that a major change in habits reflected. Just the influx of people and money and talent and all sorts of stuff has been unprecedented and tremendous. For instance, in 2021, almost twice as much money was spent in tri-county real estate versus 2019, which is the most recent pre-COVID year, which was a typical year. So that's almost an extra $40 billion spent. That was an extra $38 billion spent. And when we dig into that, we see that the biggest percentage gains are in million plus, that they were heavily cash, and that inventory plummeted across the board. And
it's, it doesn't appear to be any let up. I mean, we're seeing the same thing in the Tampa Bay area. It's just so much pressure, pricing pressure. It's just unbelievable.
Yeah, correct. And actually, I have January and February numbers that I haven't published yet, and that there's been no abatement. The trend has continued, and inventory has continued to shrink. And both months had record sales volume, while inventory continued to shrink further.
So, Anna, is your data showing where where the people are coming from, or what's causing this growth?
No, my data is simply just sales data, but we do have indicators that have been put out in the press, like change of address forms for driver's licenses. Also, there were recent year-over-year census reports that came out that indicated that there was a tremendous outflow of people from the state of New York and the state of California. And we have data indicating that Florida and Texas are the largest recipients of this intrastate migration, and it's just been a tremendous flow of people. I think 400,000 people left the state of New York in 1 year.
No, it's really insane, and we actually talked about that anecdotally, and we talked about at that time, just a rehash from the 2020 conversation. We had investors that were sitting on cash, and they were saying. Oh, well, we just feel like this COVID thing is just going to cause this cataclysmic collapse of property everywhere. And I'm like, well, I don't know where you're getting that from. But I mean, I wouldn't necessarily be sitting on your money. And so we asked you to what was your opinion? You're like, no. I mean, we see migration starting. Particularly in Florida. Now, It might be the case in New York, might be the case in California and Chicago, but it's not the case in Florida. And so, I mean, obviously that was another one of our prognostications that we're seeing on the ground here. We're seeing people from New York, particularly from the financial areas that were deciding they didn't have to work in a 80-story, 60-story tower anymore. It wasn't necessary. They did not need to be every day going into the office. And so we were seeing that migratory in the commercial office space. And we placed a number of deals.
It's all connected. And that's one of the points that I've been making a lot lately, is that it's sort of human nature to think that the present is sacrosanct, and people lose perspective on how quickly things change. And I'm glad you mentioned the office buildings, because people also forget perhaps that our habits, our way of life, how we work, all the infrastructure that we built around the office, around scheduling, all that stuff, all of those habits and all the infrastructure was established in the 20th century before the internet. Those were pre-internet habits and constructs. The internet came at the end of the 20th century. It was not always super fast, right? It was incorporated piecemeal. And then it was eventually fully incorporated, but as a tool within the previous constructs. We never started fresh. And then COVID came, shut down businesses, broke habits. And now, for those who can, life is reshaping around the internet, and new ways of living are possible. And we no longer need to have these pre-internet epicenters to the extent that we had them before.
So working 9 to 5 was just a bad habit.
Right? Who liked that? Nobody. Right? Nobody. In all seriousness, think of what percentage of one's life was spent for most people commuting to work.
Yeah. No question. That's and there's a lot of pushback. I mean, as someone who runs a business, it's hard. You have people working from remotely and trying to have the same level of touch with that person. But there's pushback. There's pushback from folks they're now accustomed to having that extra hour or more for their day that don't have to commute. And so it's going to be tough to get them to come back in. And I've been following Google and Nvidia and these large corporations and trying to seeing what they're doing, because they're really, Amazon's also another one. I mean, obviously the distribution centers, they have to be there, but their corporate offices, they're all dealing with how do you handle these desk folks that don't want to come back into the office.
It's going to vary. It's going to be some hybrid versions emerging. I don't think it's going to be a one size fits all answer, but hybrids will emerge, and it's never going to go back 100% to the way it was. And that's going to have enormous implications for urban centers that were such before all this happened.
Yeah. And you talk about the change, and, you expect the president isn't sacrosanct. It changes, and norms change. But one thing that's been consistent, and I'd be really interested to see the data, is South America. And Miami and South Florida has always been a landing ground for economic troubled areas or politically troubled areas in South America. And last time we were talking about Colombia and the migrations that were happening in Central America. Well, there's a new migratory pattern popping up on the radar screen, and I know that they're landing in Miami. Is Chile has taken a fairly significant turn to the left. And you're seeing a lot of the folks that have ridden the wave of the economic miracle in Chile over the past few years are now starting to come to the U.S. And mostly Miami for the most part, but also all over the state of Florida, and trying to find their dislocated pesos. They're coming here.
Yep. 1,000%. And actually, one good point to make is that when we look at this flow of money and purchase activity that's happened in the last year and change here in South Florida, last 2 years. While, of course, there's still Latin American buyers coming in, they were far fewer than before because of COVID restrictions. So the main fuel, looking back at this COVID sales surge, has actually been domestic, which is interesting for Miami. And now whatever's going to be happening from Latin America, because there's always some type of instability. Now it's Chile. Who knows what it'll be 5 years from now? That's going to be on top of this new domestic demand.
So one of the things that we had over the last year, and I can't remember if we factored that in when we were talking about forecasting going forward, but we had these tremendous change in fiscal and monetary policy, and a lot of that's already flown through this, gone through the system already. But I just wonder what impact you think. Did that do its job? Is that what helped propel this? Because there was a lot more capital in the market.
Well, I think as we were talking about before, it's that people with financial assets felt richer and had more money, and that fueled the wealth gap, but it also probably contributed to the growth in million-plus sales, which benefited that portion of the market here in South Florida. And it's also probably an attribute of the country's continued polarization.
Yeah, we were concerned, like looking at just in our market, when almost all the multifamily developments in the last few years was luxury multifamily. Yep. And as prices rose, the developers couldn't afford to build affordable housing. They had to charge those premium prices to get their investment back. And we thought like some of them were taking risks, and yet they've all been absorbed and there are more coming.
They were on the right side of the trend and in the right place. That's what it is.
Yeah.
It's also, look like the million-plus activity here isn't just due to the wealth gap phenomena. I think it's also due to like a selection bias. That's the demographic of person that's moving down here, which would make sense if we're hypothesizing that it has to do with the hybrid working trend. Is that people who work on their computers, who work remotely, are going to be paid more than people who are, generally speaking, than people who are tied to geographic locations like service workers. And so it seems that we're getting like that section of the population is coming here. It's people who have better paying jobs, who probably have financial assets, and who have benefited from being closer to the printing press.
Let's talk a little bit about the nuts and bolts of the market. This is another conversation I had with somebody the other day, another smarty that is sitting in cash and telling me that that he's waiting to pounce on property in the Tampa Bay area, particularly St. Pete, because it's the prices are super elevated, and there's going to be another debt collapse like there was in 2008. And I don't know, I want to hear from you cash deals down there, but I tried to tell him that cash deals make up a majority of the transactions, the residential transactions in the Tampa Bay area. And I don't know about you, but if I'm paying cash, I don't care if the price goes down 10, 15, 20%, because I'm not going to be a pressured seller if there's a dip in the economy. So tell us about, is it the same in South Florida? Are you seeing significant numbers of cash deals in South Florida compared to debt?
Yep, and the higher up you go in price to a point, like it's higher cash. So for the city of Miami, million plus condos were almost 70% all cash.
70%.
Like 66, 67. It was over 60%. And yeah, there are a whole lot of segments of the market that were over 50 and over 60% all cash for purchases, houses or condos. And so, no, I agree. We have a dynamic where we have now some of them might refi later. They're paying all cash because the seller wants to close quickly and there are multiple offers. Like, who knows? But it's not a market that's supported by debt or liar loans. Certainly not. That's very, very different from last time. And the same time that we have this activity of high, record sales volume, very high all cash purchases, we have severely contracting, constricted supply. So I don't see, like, when you see a precipitous crash, like a precipitous drop, it's usually because underlying debt can't be serviced and everyone has to bail.
Like what happened in 2008. Yeah. Yeah.
So it's interesting that you talk about supply, because one of the things that's driving supply is we've been focused a lot on the supply end of the economics equation. Is supply in so many things have been limited, whether it's been labor, whether it's been apartments, whether it's been goods and services, and that's what's been really affecting the economy now. And we started off with a period of low inflation, and it suddenly increased. In Tampa, we probably had the highest inflation in the country at somewhere around about close to 10%. But now we're entering a different phase of the world. I was reading that credit, whereas during the pandemic, people were paying off credit cards, and now credit card debt is expanding again. So we're entering into the demand side that could pull back. And, I worry about the possibility of a recession coming down the pike or something like that, because the world's changed. We've got all this stuff going on in Europe. Gas is going to go up like crazy. So we're entering a whole new phase. I wonder if you have any 30,000 foot view thoughts on what comes next.
I agree 1,000,000%. And look, the rising gas prices, the rising food prices, all of that stuff, it's all part of the wealth gap, because who feels that the most? It's people within the median salary range who are supporting families on that, which is the bulk of the country, right? And so that's all part of the wealth gap, which is also always adds tensions to a country, adds further to the polarization of, incompatible belief systems that we already have. So it's general instability in this country. This country is just going to keep polarizing. In my opinion, it's in that phase. And all parts of the country will not behave equally. It's going to depend upon where the surge of the money and the wealth is going. There's a lot of fear and uncertainty that's spread throughout the population at the same time that you have prices rising on necessities. And so it's just, it's a tricky time. It's a tricky time. What I tell people is that no one can predict the future or see how long these periods of change will take. 5 years, 20 years, 10 years, who knows? Those are rounding errors when it comes to history, but they're significant for your life. So I would try to align myself geographically, just be in a place that's on the upswing, where the money and the business is going, not the place that's in the negative momentum cycle. Because momentum cycles are very real, and we're a big country. In different parts of the country are experiencing negative, and some are experiencing positive momentum cycles. Like, as an example, the state of California, which had over 300,000 people leave at the same time, is floating the concept of a yet higher tax bracket. Like, what are they going to achieve with that? They're going to keep kicking out people with money, but they almost can't help themselves. It's almost like in the script. It's like, Venezuela going terminal. It's inevitable. So you want to, just for the benefit of your own life, align yourself with a place that's part of the upswing. There's always an upswing. You just need to be where it is. But I think the country's going to keep polarizing, and the wealth gap is a huge part of that.
And tell us a little bit about pricing. What have you seen in pricing since the last time we talked in residential in South Florida?
Oh, huge. I mean, look, just as an example of this, the city of Miami had the largest annual year-over-year increase in rents. Rents went up 30%. It's crazy.
30% already high, too.
Yeah.
I mean, it was already, relatively speaking, Miami by household income was, I believe, the highest in the country, was it not?
Well, yeah, the city of Miami, this whole area had one of the highest percentages also of, this is pre-COVID, of what are they called? Cost-burdened renters. That's people spending more than 40% or 30% gross on rent. That was pre-COVID. Yeah, no, absolutely. And what's happening now, though, is that people are moving from the Northeast, and they're keeping their Northeast salary, or most of it, and they're also bidding up on the rentals because they're paying years up front, all that stuff.
So it's really burdening the I don't want to call them natives, but the folks that have been living here, working the service sectors and whatnot. It's going to definitely put a hurting on them.
Correct.
Yeah, and so what about home pricing, the sales? Like what are we looking at there in terms of increases? The same, the largest ever?
The median averaging pricing has gone up significantly across the board, like huge jumps. What was it? Hold on. Miami-Dade County condos went up. Yeah, the average went up 54%, 21 versus 19. Single family homes, 82%, 21 versus 19.
I mean, the underwriters of multifamily deals must be just pulling their hair out, because you look at where these rent prices are going and you look at the household income and you see those really hyper elevated, and those things are red flags for a pullback. Let's be honest about it. But
I moderated a panel a few months ago, and the panelists were very large owners or builders of, like, not luxury, but like slightly premium multifamily around the country. With some workforce, some slightly premium. And the guys were telling me they've been doing this for like 20, 30 years. And they were both like, wow, it's not because I'm a genius. I've been doing the same thing I've always been doing, but this stuff is like printing money. They increase rents. They say that their occupancies are at all-time lows. People don't want to move. They make improvements to the properties. They increase rents. They get filled immediately. And these guys are like, we have trouble underwriting our own deals.
So of course, with all this growth and the high impact at the higher levels of residential, it affects the other segments of real estate, like the retail mix and the types of retailers that are going to come and restaurants that will come and cater to this differing gap of people. I just wondered if you had any thoughts on the other segments of real estate. I know you focus mostly on the residential component.
In terms of what we're seeing as far as new businesses that are opening up here to sort of cater to the people buying into the surge.
Correct. I mean, we got, for example, restaurants got whacked enormously by COVID, particularly the mom and pops. They just couldn't keep up with the Dardens of the world who could properly prepare for and protect themselves from COVID. The independents got whacked. So what is it looking like for the retail sector down there now that COVID, the cloud is clearing?
We are seeing, as far as restaurants go, we are seeing a lot of Northeast and New York restaurants opening up here, which are well capitalized. So probably tying into what you were saying, that the mom and pops got whacked because they couldn't hold. So it's like the bigger chains are coming here and opening up with name recognition from the Northeast. We're certainly seeing that. And then downtown in the city of Miami, there's I don't have the retail sales exactly, but there's great too. The hotel space is doing great here. One of the best hotel markets in the country. Industrial is doing great. Yeah, but restaurants and retail, probably, anecdotally, I'm thinking about it right now. I'm seeing a replacement of well-capitalized brands coming in, which would make sense because COVID kind of was, disproportionately felt by small business.
Oh, the small businesses just got, particularly restaurants. I felt so bad for them here. And, these are the folks that we all know. We drink with, we go to baseball games with them, and we hang out with them. And I hated to see so many of them bite the dust, and they're not coming back. But what we're seeing here in Tampa is a resurgence of multi-unit operators coming in and filling their spot. So I just was curious if you're telling us anecdotally, you're seeing the same thing.
And the ones we're getting here are the ones with Northeast name recognition. They're opening up places here, which makes sense because we're getting this influx of people from the Northeast who have money to spend and would recognize the brand.
Yeah. Big changes.
So we're living in a whole new world, and honestly, it's going to be really interesting when we talk again in say maybe after a year or so, because we'll see how all this inflammation in Europe and everything wound its way through the system and how it affected things. Although I suspect we're still in the Florida is still going to grow and we'll be somewhat insulated, but somewhere down the line there'll be effects on that.
Absolutely. It's all connected. South Florida region, it's so well positioned for this time. Like if all of this had happened 20 years ago with the pandemic and restrictions and people in business, all that stuff, monetary policy, all happened 20 years ago, like the Miami or the Tri-County region here in South Florida certainly would not have been ready and would not have been as well positioned to sort of emerge as a new capital. Just the timing aligned.
Yeah, it's really been an incredible few years, Anna. Florida's always been Florida. I mean, it seems to have big peaks and valleys, but it always seems to pop back. And certainly the trend has always been northward. It's been a great place for investors to put their money. Really, since I'm 56 years old. Stephen's like 156.
256. But Anna, you mentioned a really interesting one word there. You said capital. I mean, it almost sounds like you talking about a shift of a capital from not just capital as money, but almost like the economic capital from the Northeast down to Florida.
1,000%. And going back to the concept of the president is not sacrosanct. New York is the capital that it is, that we sort of, what it is in our minds is a post-World War II 20th century reality. And that was its role then. Before Bretton Woods, before World War II, all that stuff, it was London. Before that, it was Amsterdam. These cities, it's not like a dramatic statement like New York's going to die. No, of course not. London is still there. Amsterdam is still there. But the focus shifts. It always does. This is history. It's inevitable. People get in denial about it. They get mad. They get whatever. Look, I'm from New York. I love New York. But this is just simple reality of history. Change is the constant. And now we're kind of due for the next shift in focus. And I think that South Florida has all of those ingredients in place. We have one of the best airports in the country. It's 15 minutes from downtown, not like JFK, which is like a third world
right.
horrible place that takes you an hour and a half to get to sometimes. We have advantageous tax situations, which are great, especially as people with money are going to be adopting hybrid work models. We have great quality of life, great weather. We have an international feel, which is something that people from the Northeast like. All that stuff. So there's always a shift in focus. It's inevitable. And I think that now South Florida has all those ingredients in place, and I see it coming. Tech guys are very mobile. They love it here. We have a lot of high profile tech guys that have moved in the last year with huge Twitter followings, and they're like ambassadors. They're posting pictures every day. They're like, look guys, it's awesome here. All these people are coming here, and it's like, as they come and they post pictures and they say how cool it is, they get more and more people coming. So we're in the great position of having positive momentum and all the ingredients in place to continue to take advantage of it. On that note,
Anna, really, we'll go ahead and wrap it up and let you get back to your work. Is there anything else you want to share with us before we let you go?
I just, while I'm certainly the world is in this period of, tensions and stability and change and so forth for the next, who knows, 5-10 years, I'm an optimist. So I mean this all from a positive, like going back to talk about the 20th century. Of course, there were tremendous calamities and hardships, world wars, all that stuff, right? But if we look at it, would any of us choose to live 100 years ago? I would not. Like my grandma's 99. She turns 99 in May. She was born in 1923 in Macedonia. And when I think about her life, born without electricity, without running water, all that stuff, and look at us now and how we live now. And none of us would choose to go back in time. So all of this is part of the upswing of humanity. You just want to make sure, the 20th century was great unless you were in Hiroshima when the bomb was dropped, right? So you want to make sure that you're in one of the places that's getting that swing, that shift in focus. There's always a shift in focus. And so I'm an optimist, try to figure out where that shift in focus is. And yeah, that's it. I think that South Florida is emerging as a new capital.
So just in a nutshell, what you're saying is it's easier to run downhill than uphill.
1,000%. Don't fight it. Align yourself with it and just go with it. Absolutely.
Anna, it's always great to talk to you. Really love your insight and your energy. If folks want to get in touch with you, how would they go about doing that?
Sure. So they can find me on my website, which is analytics.miami. And that's where I have reports published that I've been mentioning some numbers. That's in the reports that I have on the site. They're free, no login, nothing. Just download them, go there. You can find me there. You can find me on Instagram, on analytics, Twitter also on analytics. And that's where I'm most active.
Awesome. Stephen, anything else before we let Anna go?
No, thank you, Anna. And we look forward to speaking to you and then looking back again.
Cool. Great times ahead in Florida, at least, right?
Exactly.
Thank you guys for having me again.
Yeah, thanks, Anna.
Bye.
And that was Anna Bozovic talking economics, analytics in South Florida. Oh, we love Anna. I mean, I think my only regret is we didn't know her earlier because she's such a great connection to us for what's going on in the South Florida market.
I had a professor in business school, and he once said to us, "Hey, if you ever want to get me a birthday present, just get me next year's Wall Street Journal." It's great talking to Anna because Anna's been right. We spoke last time, and what she said really happened, and it's going to be great to speak to her again and keep on doing so on a regular basis.
Yeah, compare the prognostications versus what's actually happening. South Florida is on fire. We're on fire all across Florida, and we get the question every day: when is the crash going to come? And man, in 2007. We kind of started to see it coming. The elevated debt levels, things starting to get the underwriting didn't make any sense. And the underwriting doesn't make any sense to me now. But we don't have the debt now that we did then.
So
where's the pressure?
Stronger.
Yeah, where's the pressure going to come from? I'm not saying it's not going to come. It's just I'm clueless. I know you can't keep this trajectory of 50% increase in value or 40% or 30% every year. It's not sustainable.
Yeah, but it's what Anna said. It's the trend. I mean, it's momentum now. So people start feeding on that, and they want to be where the momentum is and where the trend is. And there's a lot of people all over the world. I mean, it's coming from all over. I believe what she said is correct. Happened domestically over COVID, but we're going to see it start coming from overseas again.
Yeah, I mean, the internet's been a big factor in that. There's tax refugees. Florida's a low tax state, and New York and California, not so much so. And so you're seeing these discussions among certainly our clients that have been going back and forth. Do we really need to retain our offices and our position in Connecticut and New York? And they're deciding to pull the plug and make Florida their permanent residence. And so I don't know, Stephen. It's they're bringing those high price Connecticut home sales down here to Florida. They still can get a lot more for their money, and it's definitely affecting our market. There's no question about it.
And there's all this talk, and it's not just talk. It's going to happen. Interest rates will increase, but if all these sales are cash or the preponderance of them, it's not going to affect them. It's not going to change the attitudes.
Yeah, the Fed is under a lot of pressure to do something. And of course, we've got other macroeconomic issues that are going on. Oil prices are going through the roof, and that's basically acts the same in terms of tapping the brakes on the economy, because it's certainly on the lower socioeconomic rung. They're going to get hurt the worst, and of course that's the largest port of the population. So it definitely can help slow the economy. But I'm not smart enough really to have the crystal ball to understand how it's all going to come together.
Well, what Anna was saying, so if it slows, it'll slow on the lower end, but the upper end still has all that growth potential.
Yeah. Stephen, Anna's always a great guest. Other great guests, where can we find them?
The place to go is www.investfloridashow.com. Check out all the other guests. Even take the time to go back and look up Anna from when we spoke to her in November 2020. It's really fascinating to see how the world changed in such a short time.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.